Good evening and welcome to tonight's show. I'm your host, Tina Dawson, the owner of True Blue Designs, and I thank you so much for tuning in. Happy New Year. This is the first show of 2023, and I just want to welcome you, say Happy New Year. I hope everybody's family is doing well, and I hope everybody made it out of 2022 okay. Before we bring on tonight's guest, please like and share and let everyone know that we are on the air. We are streaming live on our new Facebook page and on our YouTube channel at True Blue Designs. Now, tonight's guest was on our show was created December 2019. And our first interview was tonight's guest. At the time, he was a partner of its bookkeeping. And today, he is the sole owner of the company. Reggie Bell came on the show in 2019 to discuss basic bookkeeping tips. But today, he is on the show to talk about the 2022 tax updates and tips that the government had put into place for the 2023 tax season. So help me give a warm yes, help me give a warm welcome to tonight's guest, Reggie Bell. Hey there. I got you muted. Hey there.
Hey Tina, how's it going?
It's going good. How are you?
Oh, it's going fantastic.
Happy New Year.
Happy New Year to you. Hope everything has been going great. And
yes. And congratulations.
Thank you.
I am so
Thank
proud of you. That is huge.
Thank
Huge.
Thank
So
you.
congratulations. I know you've been
I
working
really
real
appreciate
hard
it. Yes.
on that accomplishment, and you finished it at the end of 2022. So your New Year's Eve was pretty good.
Yeah, pretty busy. I think everybody was out partying, and we were actually sitting around the table, making sure we had everything straight for a clean changeover. So.
Yeah. Yeah, congratulations. That is huge. Well, it's the beginning of the tax season. I said that I was going to have you to come back on the show to talk about the updates for the 2023 tax season and give the viewers some tips. Now, is the final filing day still April 15th?
Yes, it is still April 15th. It's always April 15th unless it falls on a weekend or a holiday of some other sort, just so happens to be on that day. Then it's normally that following Monday unless it's set. So unless April 15th is on a Saturday or Sunday, it's April 15th or the following Monday.
Okay, so they have January. No, they have February.
Count January.
Okay, so they had. Well, I'm just talking about from the time we do the show. So they have February, March, and so they have 2.5 months, right? So hopefully they will replay this interview because we're going to give them. It's going to be jam packed with a lot of information because I have a lot of questions to ask you, and you have a lot of information to give.
Yes.
So they have 2.5 months to get it together before the tax deadline. Am I right?
That is correct. And then and my famous thing has always been, if you are just not sure that you have everything, just go ahead and get with your tax accountant, file that extension. If you know you're gonna send in a payment with that extension, and go ahead and save yourself a little bit of that sting that'll hit you when you eventually do file. But definitely. And then I'll save some more tips toward the end of some things that literally just came to me. But I know you have a lot of questions. I want to kind of get those answered first.
Okay, well, before we start, because some people may not have seen the 2019 interview. So if you don't mind, let's start off. You just give the audience a little bit of information about yourself.
Oh, that's right. Okay, so the name of the company is Bookkeeping. It started off when I was interviewing for a company, and then it turned into us starting a business from a job interview. And it was a few of
Mhm.
us, like three of us, and eventually I started to chip away at people's ownership, which was something that was originally planned from the beginning.
Okay.
The business focuses on small businesses. We started it during the pandemic
Mhm.
because there were a lot of grants and things going on, but people's books were not in order. You would go to some business owners and you mention profit and loss, and then they start pulling receipts trying to tie things together.
Mhm.
So so we started that business to help businesses
Mhm.
get some of these grants and these loan monies that were out there for the pandemic because they were legit businesses. Their books just were not together.
Right.
And from that, the company just blew up, grew.
It
Uh,
grew.
so it grew big time, and so an opportunity came to me last year this time to
Mhm.
spend more time in the business um, versus having to have versus working full time as well. So I was
Mhm.
able to spend more time into the business, and that more time turned into me being able to just take the full reins of the company, and so here we are today.
Yeah, yeah. We're gonna celebrate.
Yes,
You know I like to celebrate.
yes.
And you don't have to cook this time.
Good. It's taxi. I don't cook during taxis.
So you are a native of Alabama. Let's
Mhm.
talk about a little bit about your background. So you're a native of Alabama.
Native of Alabama, from a small town called Linden, Alabama. I went to school in Demopolis, Alabama, where I went to high school, and college at the University of Alabama, Huntsville, bachelor's and master's there. Did some time in corporate in Huntsville,
Mhm.
corporate in Birmingham and Montgomery, and now Charlotte, and so kind of all over the place a little bit. Um, and so in that, I've been able to learn manufacturing accounting, uh, accounting for small, of course, for small businesses. That's where I started, and nonprofit accounting. I was able to do a lot of that,
All right.
probably more than I ever dreamed of. But the knowledge that was gained was just vast.
Mhm.
And but my biggest passion, of course, has always been small business accounting, because some of the work I did with the company for small businesses, we did a lot of streamlining information, so that was very helpful.
Can you hear me?
I can hear you. Can you hear me?
That was crazy. Right when you started, you don't want him. You don't want these people to get this information.
Yes, that was Uncle Sam. He said he want to keep all y'all's money, so he decided to kill your whole street power. That's
Oh
what.
my goodness! The whole entire street went out right when you were talking.
So that's why you got to get that solar energy, so you don't have to worry about that in the future. You need to go and get that upgrade so you can have that tax deduction next year.
Okay, so we'll end up edit this, but we're going to keep it going. So
Okay.
you were talking about you're from a little small town in bachelor's from.
You broke up. You said a little small town in Linden, Alabama. Yeah, and bachelor's and master's from the University of Alabama in Huntsville.
Okay, all right. You work for corporate nonprofits, yada yada yada. You gained a lot of knowledge, yada yada yada. Okay, so we're going before anything else happens, we're going to get. It only happens to me. I say this is crazy. Okay, so we're going to get to the meat and potatoes of why we're here. Now we're going to talk about there were in 2022 that the IRS came up with new updates and guidelines, right, that we're supposed to put into effect during the 2023 tax season. Correct. Okay, so that's what we're going to talk about. That just threw me. Okay, so first off, we're going to talk about homeowner deductions. So the first question I had was, let's talk about the difference between standard deductions and itemized, and when do you use, what do you use when?
Gotcha. Okay, so the standard deduction is the deduction that the IRS gives you to say, hey, no matter where you fall in the scale, if your filing status is single, then your standard deduction is $12,950 for this year. If you're head of household, it's $19,400, and then if you're married filing jointly, if I'm not mistaken, it's $25,900. And so what that means is from your adjusted gross income, the standard deduction from your income, we're going to deduct. We're going to say the $12,950 to see where you fall now into the tax bracket, because as you know, our tax scale is a bracket based upon income and the percent that you pay.
Right.
This is just a flat tax, and this is what you pay. A lot of states have the flat tax, but with our federal government system, it's brackets, and so those are the standard deductions that they give you. However, you can take the option to have the itemized deductions. Usually, I would tell people that they want to itemize if they feel that their itemized deductions are more than their standard deductions.
Okay.
And so where a lot of people get it confused is they'll say, oh, I have these three things and I itemize every year. So the first question I ask is, before looking at, if they're a new client, before even looking at their previous tax return, is, okay, how much of those three things add up to? Well, I paid $5,000 in mortgage interest, I gave $2,000 in tithes, and then I got $1,000 in medical bills. Well, that's $8,000. So you naturally, I bet if I looked at your return, you had put all that information in, but you're only going to get this. You're going to eventually take the standard deduction because it's better than the itemized.
Okay.
And then on the flip, as you have all these extra deductions that go on, interest and different type of things, if they are greater than your standard, then that's when you take the itemized deduction.
Okay. So the main difference between the standard and the itemized deduction, for you to choose which one is going to be best for you, is determined by which one gives you the biggest bang for your buck, kind of, sort of, right? So
which would help you lower your tax burden.
Okay, which one lowers your tax break? So that's the one that you do. So let me ask you this, because I know the answer to this question. But when you're talking to an accountant or a CPA, I think that it's best to have one that runs your numbers both ways so that they can tell you, well, this year we did this because
Mhm.
this is the one that gives you the better tax break versus doing it this way, right?
Correct. You're
Not just
absolutely
go in and do everything a certain way.
correct. You are absolutely correct. So you want to make sure that you, especially if you're working with a tax professional. I always tell people, if you're not sure, find a tax professional, get on their calendar, and at least get a consult, if nothing else, if they're able to do that. So yeah, get with a tax professional and make sure that you have someone to at least assist you and guide you through. If you want to use a system like a TurboTax or an
Mhm.
online system to do your filing, but you want to make sure that you put in all the information to make sure that you get the best bang for your buck, and don't just say, okay, I got all these forms from the government, I put them all in, so good, we're good to go.
Right.
Because sometimes you may still be missing out on something, and usually a tax professional will be able to help you to ask you more questions to make sure that you're not missing more deductions.
Okay. Um, Last couple of years, there it was a seller's market, right? People were buying homes like crazy.
Mm-hmm.
And the bidding process on homes, I know people had 50 offers on a home, right?
Mm-hmm.
Okay, so the mortgage interest is tax deductible. Can you explain, for those people who bought homes last year, your mortgage interest is tax deductible. Can you explain the benefits of filing that?
Correct. So that's one of those, again, you have to itemize to do this.
Okay.
Years ago, you used to claim this without having to itemize, years and years ago. But when they
Mhm.
did an overhaul, then now it has to be itemized, which means that it has to, your mortgage interest must be one of those things that's included in the rest of your itemized deductions to get you above that standard deduction.
Okay.
If you purchased a home, let's say you purchased a home in February of last year and
Mm-hmm.
you paid God knows what over asking, 9 times out of 10, with the rates the way they are now, that mortgage interest probably has got you right on the line already within itself to help you reach that minimum based upon the value of the home.
Okay.
Now, the maximum amount that you can deduct from mortgage interest is on the first $750,000 on the purchase. It
Okay.
used to be $1 million a few years
Mm.
back. Now it's 750. So you can deduct it on the first 750K. So that's another thing that you also want to be kind of cautious about too. Because I know with some ballers out there, and I know some people bought some homes, some homes. And
Yeah.
so only up to their first 750 is what's tax deductible as far as.
Okay. So the mortgage interest rate, the mortgage interest that you pay is tax deductible, but it has to be itemized on your taxes, correct?
Correct.
Okay.
Correct.
Okay.
Mhm.
Gotcha. Okay. Let's talk about property taxes, sales taxes, and state income tax deductions. What were some of the changes, updates in those three areas?
Gotcha. So as far as those are concerned, um, it pretty much fell into the realm of, um, as far as the property taxes, not much changed in that. That's really a bigger, unless you're in all of that investment, like home flipping and things of that nature.
Mm-hmm.
That's going to change every year because I don't care how you put hours and see how can we get more money. So we got this deficit we're trying to cover, and it's our job to help get some of that money back. And so within that, I always tell people that your property taxes, again, that falls to those things that you got to itemize. Usually, the property taxes are on the annual form that you get with your mortgage interest, how much you pay
Mm-hmm.
the property taxes. So that's going to be there. Sales taxes. Sales taxes are deductible.
Okay.
And when I say sales taxes are deductible, I mean if you go to Walmart, that sales tax that you paid is
Mm-hmm.
deductible. Now, within that though, that means you got to be keep very copious notes and receipts
Right.
of everything that you purchase for that. But that sales taxes, if you purchase a vehicle, usually those large purchases like that,
Mhm.
all those sales taxes in that all becomes tax deductible if you itemize. And then you mentioned one more.
It was state income tax
Oh
deduction.
yeah, and then your state income taxes all deductible. Usually that maximum, if I'm not mistaken, is right at $10,000 in total.
Mm-hmm.
And then of course that's on the federal side, but then it differs in every state. So
Okay.
if you have a state income tax, then there are some states that are blessed that don't have an income tax, but I pray for their property tax. But if you're one of those states that has a state income tax, then that's also one of those things that is also deductible. Oh, that's for me.
Regis,
Yes.
Reggie.
Uh-huh.
Okay, I'm on my. I gave up on my computer. I'm on my cell phone. It went out again. I am so
I'm
sorry, everybody. This is some great information that. Okay.
Tina, I'm not hearing you.
Somebody hit a transformer in our area. It just went out. I promise you I paid my bill. So it's not me. It's not me. Oh my goodness. They picked a good time for this. I just can't believe it. I can't believe it. This, yeah, it's still there. Okay, so we're gonna have to use phone.
Hmm.
Okay, so we're gonna have to editing. Okay, so we were talking about um the state income tax.
Hmm.
Okay, so you were saying that the state income tax
Right.
is deductible on your taxes.
That's correct. That's correct. There's also one of those tax deduction as well, what you paid in your state income tax. But then again, that is that one of those things that you itemize, and on the federal side, but then on the state side, however, as far as state income tax, it's just what you pay if you pay a state income tax, and of course, all of that as far as that deduction itself, those things like that are different in every state. So if you're not sure about it, I always tell people just double check either with your tax preparer or try your luck at trying to get with your state agency.
Your you'd have to talk to your tax professional to find out the rules that pertain to your state, correct?
Correct. Mm-hmm.
Okay, so let's talk about the cost of financing and refinancing discount points. Are they deductible?
Yes. Um, the IRS looks at that as pretty much as a prepaid interest payment, so to speak. So they are also tax deductible because the that is pretty much as far as like the if I'm not mistaken, because I sometimes um get them kind of mixed up a little bit, but the when you purchase when you're purchasing your home and you kind of pay the points to kind of lower your interest rate or what have you, that prepaid interest itself, that's tax deductible. And then of course when you refi, that's also tax deductible as well too. But the thing about refining, you have to be careful because sometimes you really have to amortize that over the life of the loan versus that first purchase. When you prepay all of the interest up front, then that's definitely tax deductible once you itemize your taxes.
Can you hear me?
I can hear you now.
Can you hear me?
I can hear you now.
Okay. We're gonna keep going. We may have to re-record this. We're gonna keep going. Okay, so you touched on something, you just touched on something because we had this conversation today. What is the name of the form that we were talking about earlier today? The 179, the 1082, what was the name of the form?
um, oh gosh, is that you talking about the one for the uh, the equipment purchase? The equipment purchase. Oh gosh, that is form
70,
number.
179. But
Yes.
let's talk about the difference because the way you explained it to me really made sense. So
Mhm.
let's talk about the difference in taking a lump sum deduction versus um, depreciating
Mhm.
that. particular item over certain amount of years. Let's talk about that.
Correct. So in this case, the IRS has, and if I'm not mistaken, I think this is the last year they're going to be allowing you to do this. If you make a large equipment purchase, say you're a manufacturing company and you make hair grease, just call out something, and say you purchase a machine to help you manufacture that hair grease, and that machine was $20,000 for that machine cost. You have the option of writing off that entire $20,000 the first year as an expensing off that entire $20,000 the first year to lower your income, or you can depreciate that over the 5 to 7 years for equipment depreciation. And depending upon what
Okay, I'm sorry. Go ahead.
Depending upon what you
Okay.
And depending upon what you purchase will depend upon your depreciation amount of time. So in that, you'll know. I'm sorry, and so in that you'll now know. Say for example, like I said, you purchase the equipment, and I always tell people if every year you're just kind of like in the startup phases of the business, so to speak, and your net income is really kind of low as of right now, instead of expensing it out, I would tell people to depreciate it over some time to kind of spread off that expense to kind of keeps your income leveled off until you get there. Now, if you're making, I don't know, 70, 80, if your net income is $70,000, $80,000 annual a year, and you're really trying to get down on that tax bracket, then I would definitely expense it all that first year since you can, so that you lower your taxable income.
Okay. I'm back on the computer. We are going to re-record this, so you got to give me some time this weekend. Okay. So when trying to decide whether or not to take the lump sum or to itemize, right? Mm-hmm. Once you take the lump sum, you can no longer claim, right, that that equipment purchase or that large purchase. Let me just say that. Mm-hmm. You can't do both. So you have to either take the lump sum, or you have to depreciate it mm-hmm. over. Okay. Over.
Because if you do both, that's double dipping.
Right. Okay.
Now, if you financed the equipment, say you got a loan on the equipment, well, that you can't take the payments, of course, but the interest. Say you took the $179 and you wrote the whole thing off. But the interest payments that you're paying on that, you can still take that depreciation. You still take that expense because you're paying interest on a piece of equipment that's solely specifically for the business and for gaining our profit. So yes, you can take that deduction.
Okay, so there was a question that came in. It says taxes on a car purchase are tax deductible if itemized. It's a question.
Correct. If it's itemized, then the sales taxes, of course, are deductible. If you itemize and your itemized deductions are greater than your standard deductions, the sales taxes, and also usually the registration taxes as well too.
The registration taxes. Okay. Mm-hmm. All right. There's a lot of things that you can deduct.
Oh yes.
Okay. Let's talk a little bit about renewable energy tax credits.
The solar stuff y'all need to put up there.
Yes. Solar, wind, geothermal, and fuel cell. What is the IRS saying? Well, the main one out of those four is solar. Mm-hmm. That people will get. So let's talk about the IRS updates as far as that and what you can and cannot, any credits that they may give you if you have solar.
Correct.
on the
Correct.
house.
So the good thing about that, for the solar panels, that's the panels, the construction, the
Mhm.
installation, and everything to get those things working. That whole thing, there's a 30% credit. Now, a credit is one of the best things that you can have, because a credit is dollar for dollar lowering what you owe in taxes.
Okay.
So that is wonderful. So all of that rolled into, you can take up to 30% of that and use it as a credit. Now, the number one thing you must remember though, that must be used on your primary residence.
Okay.
So not the vacation home down in Florida or anything like that. It must be, you must want to make sure you're used on your primary residence. And I always tell people, especially now with this influx of funds going into the IRS,
Mm-hmm.
want to make sure that you try to follow these codes as closely as possible, because if you now get sprung for someone that says, hey, let me just pull this one, it looks interesting, and want to make sure they know they're doing everything right, then you want to be able to answer as quickly as possible and as accurately as possible, because you don't want a one question to turn into now a 30 question. And
Right.
now it just gets deeper and deeper.
Okay. Let me ask you a question about the electric cars. A lot of people are starting to buy the electric cars. Are there any tax deductions for the purchase of electric cars?
Yes, yes, there are tax deductions for the purchase of electric cars. It's going to fall into all of that renewable tax energy stuff
Okay.
that the president signed previously. So all of those different things will fall into that. And then depending upon the car and the amount and everything of that nature, it all falls into that category. But yes, it is tax deductible.
Okay. That's good to know.
Mhm.
Um, the last question I had concerning homeowner deductions was exclusion of gain on the sale of your principal residence, deductions of capital gains.
So as you know, the everybody buy sell over the past, like it has been crazy.
Mm-hmm.
Houses that were 5 or 6 years ago, maybe 200K, now $600,000, 700,000. I mean, and you got people coming from nowhere. I mean, asking, paying big money for that.
Mm-hmm.
Well, that has brought a whole lot of capital gain into question. And
Okay.
so I'm pretty sure a lot of people are going to be using this deduction. So this is like one of the granddaddy of granddaddies as far as tax deductions are concerned. So
Okay.
if you're married filing jointly, you have up to $500,000 capital gain that can be excluded from your income if you married
Okay.
filing jointly, and of course 250 if you're single.
Okay.
So knowing that capital gain of that house, if that capital gain of that house is 501,000, then
Mm-hmm.
only 1,000 of that would have to be a capital gain tax. So
Okay.
you'll be excited to hear that.
Okay. All right. So that's good to know too.
Mm-hmm.
Yeah, because like you said, it was a frenzy. It was a buy sell frenzy last couple of years. It just
Correct.
started to die down the end of last year, going into this year. So
Correct.
so that's good information. Were there any updates and tips for the small business deductions?
Oh yes. Hold on 1 second, Tina. I'm sorry.
Okay. I thank everyone for being so patient. And what I'm going to do is we're going to edit the video. Somebody hit a transformer in my area and it went out twice. So I see some people are hanging on with us and I really appreciate it. So we will make sure we edit the video and piece it together so, so that you can listen to it all in one piece instead of chopped up. So I appreciate everybody being patient with us. It's the first episode of season 4. And it's one to remember. So I thank everybody. I thank everybody. Okay. So we were talking about any updates for small business deductions.
Yes. So So with small businesses, it's a lot of. I tell people the biggest update is making sure that you're keeping your records and your documentations in order.
Okay.
And that's mainly been because of the influx of the funds given to the IRS to, when I say conduct more audits, it's not necessarily to conduct audits on the small guy, anything like that, but it's really on those high grossing, those high grossing individuals.
Mm-hmm.
And that's of course falls into the business category. You
Right.
know, if you're grossing, I don't know, $900 million, but you're only netting out 30, 40K, that may get called into question. So so you want to make sure that you're keeping accurate records and documentation of your deductions, because that can get sprung for audit. So that is the biggest thing I've been warning businesses about, small business owners about. Most small business owners are very meticulous to really keep those records. The best ones are. Some are still starting out, and so when starting the business and maintaining the accounting part of it, it kind of gets, usually the accounting part gets thrown to the side. But I
Yeah.
tell people a trick to that is to make sure you use the same bank account for all of the business transactions, and do
Okay.
your best not to commingle your funds. And so that will really help you keep things straight when it comes time to pulling your records together for tax season.
Okay. Okay. And they can use different softwares like QuickBooks to help them. That QuickBooks has basic versions.
Mm-hmm.
The one thing I learned, for all these years, I used Quicken, and I didn't use it to I didn't take full advantage of everything it had to offer, but I was good. I was taught to put in my receipts and reconcile every Friday, so
Correct.
that when I got to the end of the year, I can just press a button, print a report, transfer those numbers to the sheet that my CPA gives me, and then off you go. But
Mm-hmm.
I have had those years where I kind of got behind and had to play catch up at the end of the year, and it is a headache.
Yes.
It is a headache. And so
Yes.
the rule, I'm gonna say this: the rule for dealing with CPAs and accountants. I'm gonna tell everybody the rule before you even call them. This is the rule: the more they do, the more you pay. The less they do, the less you pay.
Mm-hmm.
I'll say it again. The more they have to do for you, the bigger your bill.
Mm-hmm.
The less they have to do for you, the smaller your bill. Thus, this tip is important,
Mm-hmm.
right? Because if you keep your records in an accounting software or Excel or something, it will make your life a whole lot easier.
Whole lot easier.
So let's talk about home-based business deductions. What are some updates or some tips that you can give us on that?
Yes. So with your home-based business deductions, um, I always try to tell people to make sure that if you can, the first thing you want to do, if you're gonna have a home-based business, try to find a spot in your home that's gonna be specifically for the business. I mean specifically. If you have 4 kids and now the oldest one is now grown and gone, that child's bedroom is now the office.
Okay.
Move the bed out. It is a full office and it is specifically for the business.
Okay.
Keep up with the square footage of that office space, because now everything that it takes to run that office space, the lights, everything to take the office space is now tax deductible on the home based business front based
Mm-hmm.
on the square footage of the house. So if
Right.
that bedroom is 5% of the house square footage, then 5% of the bills to maintain the home goes into a tax deduction on the home usage sheet. Now, if you have an office space, You can't do both. So if you have a main office space in a building where that you're paying rent, that's that's your deduction there. So
Okay.
I try to tell people be careful about trying to double dip on that front
Okay.
because, like I said, they now have more people to kind of catch these things, and so if it gets sprung for audit, then that's something that can come back to haunt you.
Okay. So if you have a designated space in your home for a home business,
Mm-hmm.
right? So you need to keep up with the square footage of that designated space,
Mm-hmm.
right? And the expenses, right, to keep up
That
that
space.
designated space or the area around it
Mm-hmm.
can be deducted from the taxes.
That's correct.
And it's
That's
probably a
correct.
percentage of it, but
Mhm.
you can get a tax deduction, such as alarm system, yard maintenance, things, lights, gas, things of that nature.
Everything to keep that space
To keep
running.
that space running, right?
Mhm.
Okay, but if you have an exterior space and an interior space, and you're paying rent in the exterior space, you have to claim. You should claim that one and not the home. You can't
Correct.
claim both.
Correct. Don't I tell people don't try to do both because that's gonna raise that flag.
Okay.
Choose ye which one.
Choose G, which one you
choose
gonna
ye this day. Which one are you gonna be?
choose? Okay, you mentioned to me that the importance of keeping a mileage log. Let's talk about that.
Yes. So a lot of people say, "Oh, my car is for business." Da 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 da. And then when they come to me and say, "Okay, well, tell me about your second car." Oh, this is my car for everything. Okay, all right. So now let's talk. Where's your mileage log? I'm asking for mileage logs now. Mileage. Okay, so what the importance of the mileage log and I use my vehicle for personal as well as business when I go on business trips and stuff. And I have a little notepad in my armrest.
Mm-hmm.
Normally, you should keep it on your. Normally, I put everything on my phone, but I have a notepad in my armrest, and I
Mm-hmm.
just pull out that notepad, write my date, my current odometer when I leave, and my odometer when I get to where I'm going for the business trip.
Okay.
And I write down my odometer on January 1, and I write down my odometer on December 31. And so I keep a detailed mileage log every time I drive and for business. I don't worry about trying to keep track for personal. I always want to keep those business miles because those are the miles that I really need to keep a number on when I file my tax return.
Okay.
And then it's just like the home. If you drove your car 30,000 miles and 3,000 of those miles were business, then 10% of all of the expenses to maintain that vehicle, oil, gas, tires, insurance, the whole nine. If it's a lease, 10% on the lease payments, all that stuff goes into a tax deduction for the use of your vehicle. But there again, keeping that mileage log is absolutely important because if you are ever audited on that particular area, it's going to be very nice for you to have a handwritten log with dates that you can take copies of and send into as far as proof that the numbers that you submitted are accurate.
Okay. So if you have a vehicle that's used for personal and business use, it's important to keep a mileage log so you can detail the business
Mhm.
miles from the personal miles.
Correct.
And okay, so my next question. Um, Mileage versus gas receipts.
Hmm. So again, if it's a mixed use vehicle, the
Mhm.
mileage is going to take care of it all.
Okay.
Because you got your gas receipts that you gotta put that number in to get the percentage of the gas, total gas
Mhm.
for your total miles traveled.
Okay.
Now, if you just have your gas receipts, say it's a business trip, and you got your gas receipts for this business trip, then that's different. That's a travel expense for that trip. You
Right.
have receipts for that trip, so everything for that business trip itself those receipts are definitely deductible. But if
Okay.
it's one of those for a mixed use vehicle, then yeah, you want to definitely try to keep that mileage log. And there are apps for that as well too. Mile IQ, even QuickBooks, you have it on. If you got the app, you have a mileage tracker on the QuickBooks app that comes with all the versions of it as well.
Okay.
Mhm.
Um, let's see. So, can you think of any other updates that came that was detailed in 2022 for the 2023 tax season?
I want to say, outside of just the detailed part, I want to say that you want to take your time and gather all of your tax documents
Okay.
before you file,
Okay.
especially if you've moved.
Okay. Why is that?
Because if you've moved, say you worked at place A in early 22, and you've been there for X amount of years, and you left in like March, April, and then you started place B in May, and you're still at place B. But say you moved in August. Well, sometimes when you left at first employment location, you may have not have known or thought about making sure they had your new address and mail your W-2, so on and so forth. So, like in my case, I moved, but I made sure I had mail for an extended mail forwarding service, so that when I moved, any mail that came in afterwards for the next 9 months to a year, pretty much got transferred to where I am now. And I've been one of those people like, oh, first day I'm gonna go file the 23rd. They're accepting. I would have missed the W-2 that came in the mail today.
Right.
So
Right.
you want to make sure that you take time and gather all your documents. And make sure that you have documents, or make sure if you know you did something like unemployment, make sure you have your 1099G for unemployment. If you withdrew from your 401k, make sure you got that document. So if you know what situations you had the previous year. So make sure you get all of those documents before filing, because the number one thing that will spring you for a correction on your tax return and will have interest and penalties is failing to file some income where somebody submitted a tax document on your behalf. If you did freelance labor or freelance work and people said they're sending you a 1099, wait on those 1099s. The deadline for them to file those is the 31st. So you may not get some of your 1099s until sometime in the first week of February if they're being
Right.
made.
Right.
So wait, I say, on that information before you go filing your tax return.
Okay, let's talk about the marketplace, because this actually happened to me. I filed my taxes and I forgot they only charged me for 1 day on the marketplace, because the very next day I had insurance with the employer, right? But I forgot that I needed to get the form for that 1 day. Totally forgot. She asked me if I had marketplace insurance. I told her no. I forgot because it was only for 1 day. We filed the taxes and it got flagged.
Yep, got rejected.
And it got rejected. And so she called me back and she said, did you get marketplace insurance? Oh. So she said, you need to look into that. So come to find out, it was 1 day, small amount. I had to go and get the form. She had to resubmit or whatever you all do for the taxes, and that took a while for them to accept it and then process my taxes. So let's talk about the healthcare marketplace or Obamacare, about obtaining that documentation for your taxes.
Correct. There are two different health insurance forms that you'll get. If you're employed with the provider, you'll probably get a 1095C. And you have health insurance in your job, it's 1095C. So that form is an information only form. You don't have to do anything with that, but just look and see, okay, I had insurance, hold it with your records, but you don't have to file it with anybody.
Okay.
But then from the marketplace, anything like that, you get that 1095A. So pretty much they're saying based upon your application, when you first filed, you were saying you were going to gross out or make X amount of money. And so we gave you this credit based upon this amount of money. So you're filling out this form,
Right.
and they're comparing it to what you've already submitted. And then based on how that comparison comes out, it could either it could adjust your refund a few dollars here or there, or it could adjust your taxes owed a few dollars here or there. Okay. But pretty much, as long as I tell people, as long as the information that you put in on your application is as accurate as possible, because that's pretty much what it's doing now. It's taking all that information that you put in over time, and it's going back and it's saying, okay, were you truthful? All right, you did good, so we're good to go, and we can file your return. And with the health insurance marketplace, you have to file a return to stay in the marketplace.
Yeah, that's true. That's true. Well, you know, this year they probably sent me one last year or the year before, but this year I did see the email that said, "Hey, it's coming in 1st of February. We'll have your statement." So you can't file without it. So
that's correct.
I have to wait until it loads into my my profile, and then on my account, and then I have to download it. Okay, I just wanted to make sure people knew that the marketplace. Please don't file your taxes without it, because I accidentally did, and it was a headache. So
another thing I wanted to tell people, a lot of people have kids in college.
Right.
A lot of these kids work that are in college. What I was talking with a friend of mine who's a former IRS employee.
Okay.
And so she is tax code genius. And so we talk sometime about just different stuff in general when it comes to taxes. And she was telling me, she was like, "Oh yeah, make sure you tell your clients who have college age kids, if they work, when they file their taxes, the students themselves, to make sure they check the box can be claimed by someone else as a dependent." Because if they don't, when the parent attempts to claim them as a dependent, their taxes get flagged and rejected. And it says someone has already claimed this dependent, or this dependent can't be claimed. And then that child will have to then go and amend their tax return, submit it. It has to get accepted, and then the parent can go back and file for that child.
Wow. Okay. So if you have a college student that is working while they're in school, 9 times out of 10, the parent is claiming the child on their taxes. However, if the child is working, that means that they're going to get a W-2. And if they get the W-2, they have to file taxes. And when they file taxes, there's a small box that says that that person is able to be claimed by somebody else.
Correct.
If that student does not check that box, or if that box is not checked, then it's going to flag the system, because it looks like 2 people are claiming one person.
Correct. It looks like one person is trying to claim somebody who's not supposed to be claimed.
Well, okay. Yeah. Okay. All right. That's a good tip.
Yes.
Because a lot of people have children in college that I know of. So okay. Yeah.
So
we want them to work.
Yeah. I mean, that includes paid internships and all that stuff.
Okay. Because even with paid internships, they still get W-2s, don't they?
That's correct. Some of them get W-2s, some get 1099s.
Okay.
Either way, if they make over the 12.9, they have to file.
Okay. Is that 12,900? Okay. Okay. So if they make less than that, they don't have to file.
That is correct. I still recommend that they still do file. Just especially if they had taxes come out of their check, because it could be a little bit of money they can get back.
Okay. All right.
You have to tell people a refund means that you put money into the system.
Right.
So you can get something back. So So that's something I have to explain. Is some people kind of upfront that not paid any taxes all year, but they're expecting something back. That's not usually how it works.
Okay. All right. Pay in, get back.
That's correct.
Possibly. Okay.
Possible.
Are there any more updates and tips you want to share with us?
On the high note, to be honest with you, that's I wanted to really share things for people who are mostly who really kind of do them on their own.
Mm-hmm.
If that's one thing that they want to do, I definitely encourage it. But then I want to give you just enough information. Know, hey, maybe I need to talk with somebody to double check what I'm doing. So definitely, if you have a question about something, get with the tax professional to kind of get on their calendar to see how if they can answer a few questions, so on and so forth. Some professionals will get on and answer a few questions for you. Some won't. Some be like, "You're not a client of mine. I just don't have time," and you have to understand that. But some definitely will allow you to have a few moments to ask a few questions. So yes.
Okay. Your information is scrolling at the bottom of the screen. What is the best way if someone wants to contact you? What is the best way? I have your email, IG, Facebook, website. What is the best way? What's your process?
The best way is to go to my website, www.itsbookkeeping.com, and click the link at the bottom that says contact us. Mm-hmm. And from there, I myself or someone will get back with you to get you an appointment set up if we think that something needs to be set up. Or if it's just a general question and you ask it through there, we'll give you back that answer. But also understand our answers come directly from the reg. We don't do anything to say, well, you can skate around. No. We try to answer all of our questions directly from the reg with a link directly to the IRS reg that shows you where we got that information from.
Oh, okay. Mm-hmm. All right. So that's pretty good.
Oh, yeah. We want to be covered because if you say you got it from us,
well, I really appreciate you. I think it was a lot of good information, even though we're going to piece it together.
So those editing skills come in.
Yeah. It only happens to me. But I thank you for taking time out of your evening to share those tips and updates with us. And if the viewers or the listeners want to contact you, the information is on the screen. It was scrolling on the screen, and you will go to his website, which is www.itsbookkeeping.com, and go to the bottom, and you said click on contact us.
Mm-hmm.
Okay. I know you have been a blessing to me. Just coming from a small business owner, I did everything myself for 13 years. Mm-hmm. And, I got commended on doing an okay job, but that for 12 years. And so that 13th year, I never thought I'd see my CPA do the happy dance because my books were in very good, they were very organized and they were in order. And it made her job a whole lot easier. She thought she was going to have to file an extension. Mm-hmm. And when she saw the package that you gave me to give her, well, she didn't even see that because I didn't give it to her. I transferred the information. And but she said my stuff was so good and streamlined, just based on that, she didn't have to file the extension. She was able to do my taxes in a couple of hours, and I was skating on that or that deadline. Yeah. But then she told me, she said, and I'm going to leave this with the viewers. When you have a bookkeeper, and there's a difference in a CPA, an accountant, and a bookkeeper, and a blah, 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 blah. But if you have a bookkeeper, they can make your life a whole lot easier when it comes to filing your annual taxes. Mm-hmm. Because the packet that they put together for you it has a lot of information in it. And, my CPA was saying, no, just give me the packet that he gave you. That's all I need. You don't have to fill out that form anymore.
Mhm.
So that's streamlined. And I told you my motto for 2023 is reclaiming my time. Yeah. And I've gotten, being with you, I have gotten you and Evelyn, I have gotten so much of my time back. And I
Yes.
just want to say thank you. Thank you. And I can take that time and put
Sir.
it to my business and, creating new things and new designs for my business. So I just really appreciate you.
You're so welcome. You are so welcome. You know I got you. And that's really what I really pride myself in doing, is making sure that the information that I give you, it's ready to go to the next person so
Right.
that you can have that next step. Because I have a lot of clients, I literally just do their bookkeeping. I don't do their bookkeeping and tax or so on and so forth,
Right.
which is perfectly okay with me. For a while, I didn't even sell my tax services with my bookkeeping services. It was just bookkeeping. And so when I hear people, like you said, I just gave my tax person the report like you told me, and they
Mhm.
looked at it and looked at me, was like, why didn't you do this 6-7 years ago? And it's like,
Yeah.
I didn't have a bookkeeper. And
Well, I told you I learned in college. Either you're running the business or the business is running you. And 9 times out of 10, when you're a small business owner for years, the business is running you, right?
correct.
And until you get a hold of certain things, and one thing that goes lacking is the financial part of the business. It really does, and
Mhm.
it just makes a difference when you have help. So
Correct.
I just want to say thank you. You hold on. I'm going to end the show, but I just want to thank everyone for hanging in with us, hanging on and hanging in there with us. It was crazy. For those of you who came in at the end, somebody hit a transformer, or a transformer went out in the area, and we dropped twice. So we're going to get someone to edit the video and put it together, and then we'll repost it. But right now it's going to be kind of chopped if you look at the video. But I thank you, and I hope that the tips and the updates and the information that you received tonight was valuable. Reggie has given his information. He's open for you to reach out to him if you have any additional questions. But I just really thank you, Reggie, for coming on tonight and giving us a little bit of your time. I know we're a little bit over, but I just really appreciate it. Just to let the viewers know that we are on bi-weekly in 2023 instead of weekly. So in 2 weeks, we will have a new guest on the show, and I'll be broadcasting that information this weekend. But thank you all so much for tuning in, and we will see you in 2 weeks. And I hope the information was informative and will help you during the 2023 tax season. Good night, everyone.